renewable energy, solar, wind, and EV and battery. China has established itself as the, I would argue at this point, undisputed global leader.
Well, hello everyone, and welcome to another session of Goldman Sachs Talks. And I am truly delighted to welcome to Goldman Sachs Talks Fred Hu, founder, chairman, and CEO of Primavera Capital Group. Now, Fred is a very important person here in Hong Kong and far beyond, and I'll explain why in a moment. But he is the founder of Primavera. He has led investment transactions including Alibaba Group, Ant Group, Yum China, ByteDance, and many others. That's not a bad list. Prior to founding Primavera, of course, Fred was a colleague of ours. In fact, some of us were just reminiscing about when we first met you. You were a partner and chairman of Greater China at Goldman Sachs and a member of the Goldman Sachs Partnership Committee. You've also served as an economist at the International Monetary Fund and on the Hong Kong Government's Strategic Development Committee and the Advisory Committee for the Hong Kong Securities and Futures Commission. That's not enough. He's non-executive chairman of Yum China Holdings, Inc., and also serves in the boards of ICBC and UBS Group. And amongst other roles, Fred is a member of the global board of directors of the Nature Conservancy. In short, it would have been much easier to list the things that Fred does not do than all the things that he does do. But here we are. We're recording this after, in many ways, what's been a historic run in the Chinese equity markets. And it began almost a week ago when we saw the joint statement by the CSRC, the PBOC, and the NFRA. That was followed by the Politburo meeting, followed by the State Council. And I think today we've seen a continuous run with the Hang Seng up another 6% over the course of the last trading period. What's going on? What's your take on what's happening?
Yeah, first of all, Kevin, thank you for having me. For me, it's a home coming, right? Come back to my old firm. So I'm just delighted to see many familiar faces, friends, colleagues in this room. In terms of what's happening, I think it's been an exciting, uplifting week or so. And I hope this will continue for many weeks, many months to come. For about 2-3 year period, there was a lot of doom and gloom about the Chinese economy. And so investors have been looking for what the Chinese leadership, regulators might do to revive market confidence, to really ensure the economy will be self-sustaining in its recovery. But for whatever reason, it's been a long wait. And, where few confidence boosting measures being announced, action being taken. And meanwhile, the economy seemed to face more and more headwinds. So all this seemed to have dramatic change a week ago. As you noted, Kevin, policy authorities announced, some meaningful policy, I would say long overdue policy measures. And that is, clearly, had, meaningful impact on market psychology, right? That's what the investors have been waiting for. So, Asia market, here, Hong Kong market, and even ADR in New York, all responded very positively. I think the truth is, it's not like, investors are really completely giving up, China. People just been patiently waiting for the needed catalyst, number one. Number two is also the underlying belief, despite all the short-term uncertainty, difficulties, challenges, in fact, the economic problems facing China are all fixable. And China still has many tools in its policy toolbox, and still has vast resources at its disposal to hold whatever deflationary momentum, weak consumer sentiments, and investor confidence, as long as the country's leadership we focus its attention and energy and the time on the economy, and we prioritize economic development on the national policy agenda. So if China does that, I do think confidence will be sustained, and hopefully this is the beginning of, I would even not call bull market, although sometimes it feels like the way, but it's really normalization, because China-Hong Kong has been so depressed for so long. So we have some catch up to do. And if economic fundamentals, policy fundamentals are supportive, I do feel like this is the beginning of better market environment ahead.
Well, let's pick up on this topic of fundamentals, because it's one thing to have an equity market rally. It's another thing to fix an economy. What are you looking to see happen now when it comes to the fundamentals of the Chinese economy? What do you think the course of action should be from policymakers?
Yeah, so we have seen the initial batch of mostly monetary and financial type of policy measures. Next, I expect the government will unleash fiscal stimulus. Okay, so right now it's notable for its absence. And actually among the large economies since the pandemic, in the US, EU, Japan, all used a lot of fiscal stimulus. China actually, by contrast, were very, very stingy, almost nothing to speak of. So it's high time, for the government to also step up fiscal stimulus program. Of course, calibrated, targeted towards household sector, not so much more fixed asset investment, more capacity building, which China does not need. But I would say on top of that, the conventional monetary and the fiscal policy stimulus, China has even more important stimulus, which was really just structural. Does not cost the government a penny. It just really do the best possible job to reassure private sector, reassure consumers, reassure domestic and international investors about the long-term direction of China. Okay, are we still committed to free market economy, right? Are we still committed to peaceful rise, for China to reclaim its rightful place in the world peacefully, despite all the odds against it? I think, if Chinese leaders do a better job reassuring domestic public, most important, but also international investors on those two, I think, China will restore its luster as being, the most dynamic major economy in terms of growth, in terms of the opportunities, but also in terms of investment opportunities for financial and other long-term investors.
Well, let's turn to that. And one of the points you just made was around the confidence in the private sector in particular. If I can extend that to domestic entrepreneurs, the entrepreneurship, the innovation, what are you seeing on the ground? And you spend plenty of time in China. You meet with and you talk to a lot of the entrepreneurs. How do you feel about the state of innovation in China?
So since we opened of China from zero COVID, we have seen increasing our steady improvement of business confidence and entrepreneurial confidence. But it's also plenty clear to me when I talk to many of my partners, friends, in the entrepreneurial community, that the people still take a very cautious wait and see attitude because there's still lack of clarity, right, in terms of fundamental direction on the minds of the top leadership, whether private sector, is genuinely embraced, right, as the essential and perhaps the most important player of Chinese economy. So yes, there's been improvement, but I think not enough. We need to see more, not just rhetoric, right, but also actions. So if animal spirits in China are revived, then I think I would be very, very bullish on the medium long-term outlook.
One of the areas which, of course, we talk about a lot globally is AI. And if we turn to, therefore, where those animal spirits could be deployed, how do you feel China's situated in this development, almost the race for AI, and the extent to which China is well-placed or otherwise? What are you seeing and hearing in the AI space?
Yeah, prior to end of 2020, I would argue US and China were nearly neck to neck in AI, notably in hot fields back then, such as computer vision, like facial recognition, pattern recognition, autonomous driving, right? And NLP, natural language process, which is precursor of today's Gen AI. I think in those hot areas, I think China and US were pretty much equal. But as I noted, there was a very harsh crackdown on the tech sector. I would say really self-inflicted harm to China's innovation and the AI in particular. So with the investor confidence, being decimated, animal spirits, depressed, and dramatic slowdown in AI investments and progress. So by November 30th, 2022, when OpenAI released this ChatGPT, that sent a shockwave to the Chinese tech community. Those few days, frenetic. I got a lot of calls, messages with many of the tech founders and the leaders in China. So there was instantaneous realization China was left behind in Gen AI, where through larger language model, to kind of demonstrate the emergent but potentially very powerful capabilities, whether it's text generation, video generation, reasoning, right, with a very broad range of applications, industry like education, finance, and manufacturing, and so on and so forth. So then, from that point on, China has been playing catch up, okay, and actually with quite the impressive progress. Not only the big tech companies like Baidu, Tencent, Alibaba, all releasing their own version of LLM really within a matter of 3 to 6 months, right? Which is really, really stunning speed, from scratch. But there are also a number of startups, AI startups, developing their own LLM. But at this point, I would say, China's still behind the leaders in the US, such as OpenAI, Anthropic, or Google DeepMind. Maybe 12, 18 months, roughly speaking. But the AI race is still ongoing. And right now, US still takes the leadership role. But I think, on the global stage, China is following closely behind.
Well, if they're following closely behind, they are one area where I think many would observe that China has a leadership position as electric vehicles, EVs. Where do you see the EV market evolving, both domestically in China, but also overseas? Some would think awful lot of EV manufacturers. It's very striking when you go to any Chinese city, you see the green number plates with all the EV cars, particularly in Shenzhen, or even here in Hong Kong, there's a lot of EVs. How do you see that marketplace evolving and China's role within it, given the extent to which the volumes depend on being able to export to markets that may be a bit worried about the number of Chinese EV imports that are coming and the concerns around the capacity that's been built in China for EVs?
Right. So, we talk about the China's innovation potential, right? So the massive investment in education, in R&D, and building a very strong human capital base, very strong scientific research base, and over the last 2 decades. Chinese universities, churn out 4 million STEM fresh graduates every year, right? That's leading the world by a wide margin. China has already eclipsed the US as the largest patent applicant in the world. So definitely, China has, developed a very, very strong innovative capacity and capabilities. And the most, clear example is what you just mentioned, Kevin. It's really in the, I would say, whole energy transition, renewable energy, solar, wind, and EV and battery. So China has established itself as the, I would argue at this point, undisputed global leader. So that, I think, in normal times, it's really blessing, not only for China, but for the world, right? So we are still in the midst of early stage of global energy transition, we're trying to, mitigate the climate crisis. But unfortunately, we're in a highly abnormal times, in the world. So the response by US and by European Union, I think, is not very encouraging. These are the two largest trading partners of China. So not just the high tariffs, but also, outright blockade. I think that's going to, preventing, thwarting legitimate, highly beneficial trade, investment flows, and the technology sharing, right? So because China has really developed this, I think, incredible model of EV, enabling mass adoption because it's affordable. So that really enable quick and mass adoption worldwide, right? So benefiting consumers in North America and Europe, middle-class families. And importantly, something you and I care about by being the major Conservancy, Asia Pacific Council, is really to enable, really usher in emission-free mobility, right? Because transportation plays a big role in carbon decarbonization and emission reduction. So if we allow EV smart mobility, but also actually, pave the way for intelligent driving, which is autonomous driving, right, on a worldwide basis.
You mentioned the Nature Conservancy. We both are involved. You're more involved than I am, but we're both involved in the Asia Pacific Council. And it does beg the question, which you were going towards, of the role that China has to play in the green economy and making sure that some of the challenges on the emissions front are addressed. How would you characterize that element of innovation and the extent to which China is playing its part in the transition to a green economy?
So, as I mentioned earlier, in terms of energy transition, China is really the undisputed global leader because of massive investment over many years. So what China has invested in renewable energy is greater than the sum of the investment capital made by US, EU, Japan, Korea, combined, right? So, and those are high investment economies. And in solar, wind, transmission technology, like, super high voltage transmission. I don't know if you heard this term, like in terms of the transmission network. And in energy storage, obviously EV and the battery supply chain. So, China has many of the cutting technologies and still better, very efficient manufacturing base. So that obviously will serve China very well, as China being the largest energy consumer and still largest carbon emitter. So will serve China well, but also can really help the rest of the world, right, to make much faster, meaningful transition, so that altogether we can meet the challenge of climate change.
So let's take it now to Primavera, your business. Just give us a little sense of the business and how you're positioning in this current environment.
Well, it's been a very challenging couple of years, right? So sluggish macroeconomy, regulatory uncertainty like in China, and also rising geopolitical uncertainty, all have made the private equity venture industry much more difficult than historically. On the other hand, I'm happy to observe the industry has also proven to be very adaptable, very resilient. And, compared to US, the industry in this region is still pretty much nascent, right? Still pretty small. So that means there's still a lot of developmental potential ahead. As the markets normalize, if we can see more and more evidence of sustained economic recovery, and then confidence come back with more buoyant public markets, I expect to see a very strong pickup in both fundraising and, more importantly, deal making, and hopefully do more with the firm.
We love that too.
So I think like the rest of the financial industry, I think private equity and the venture are kind of like a inflection point.
Well, let's go back in time, almost to the beginning, and I read out the very impressive list of businesses where you were involved very early, whether it was in Alibaba, some of the others we talked about. What was the theme? How did that all happen? Just take us back to the early days, and was it a pattern? Was there a theme, or was it more just entrepreneurship? How did you get into where you got involved?
So we have built a portfolio of over 100 companies, right? So across a range of different industries, from consumer retail to healthcare to technology and to climate, energy transition. So pretty broad. But I would say that there's a common thread or underlying thinking is really the emerging, rapidly expanding middle class, right? What they need, in terms of consumer goods and services, and also, that China joins US as one of the most important innovative leaders, on science, technology, and then of course energy transition. So these three themes, I would say, are the sort of guiding northern lights in terms for us how to think about sourcing interesting, attractive investment opportunities.
Take the middle class. A lot of observers talk about the demographic headwind that China faces, but I know you've talked about the middle class in China and how that continues to be a very important source of opportunity. Why?
So roughly speaking, right, there are like 800 million middle-class consumers in China. So that's still under, it's a big number, but it's still under 60% of China's total population. So compared to 335 million in the US, the total population, and 449 million for the total EU population. So just look at the 800 million middle-class consumers, which is like, compared to the EU and the US. And private consumption as a percent of GDP, I think, Kevin, this is at 45%. That's just abnormally low. India, for example, is 60%. US, typically 70%, right? So each incremental, increase percentage of, consumption GDP share, it will unleash tremendous demand to supercharge the economy, not only for Chinese economy, but for the world economy. So there's a potential for Chinese consumers to, the demand, the spending will, drive the Chinese economy and the world economy, akin to the role of, that the US consumers have historically played, right? Almost the consumer spending of last resort. So that I think is happening. You remember, even before pandemic, 2019, what the Chinese consumers were really the driving force for, say, European luxury industry, and for smartphones, food, soybean from South America, of course EVs, right? Chinese consumers are the primary, spending. So, admittedly, as we all know, last few years consumer sentiments are weak, but it's not because they don't have the spending power, right? Chinese households, despite the hit on property or even on public equity, Chinese household balance sheet is still healthy. Saving rate keeps going up. they just need a bit more confidence. So in terms of labor market, in terms of, private sector, right? So that I think as we speak, I think maybe it's the beginning of a pickup. So that will come back, and not only just for the short term, but over mid long term, that will should be like very much in the US after World War II. Chinese consumer middle class spending should become the primary engine of China's GDP growth. And we're just at the very beginning. So that's why I still have a reasonable bull case for China's mid and long term economic growth on the back of my faith in Chinese consumers.
It's good to have faith in the Chinese consumer. Now, if you look at the landscape of where that could take us, I mean, you've already talked about green tech and a lot of the activity there. We talked a bit about AI. You did mention healthcare. It's an area where I know you have been focused. Talk to us a bit about the healthcare landscape and why you think that's an area to keep in mind.
So healthcare is also just really as a byproduct of the rising urbanization middle class, right? When you're middle class, you pretty much, you have a home, you have a car, you have every other, gadgets, you might need. So it's really I would say in China is education and healthcare. That's where we're going to see more and more share of household income on those categories. And the healthcare obviously is very, very big. I'm sure there are experts in this room. It's a very big industry, right? From pharma to medical devices to healthcare delivery. And we have seen over the last couple of years, growing opportunities in each of these areas, right? So China, until maybe 5 years ago, I wouldn't say, it's anywhere in terms of drug discovery and, innovation. But now, at the more and more startups, these are highly trained, PhD in life science, in, bioengineering. Medical device, again, definitely US, Japan, Europe are still the leader. But China is, rapidly catching up. There are some really niche areas, China become where has developed packed of excellence. And then, of course, healthcare delivery, that's even bigger industry, right? It's still early days. For example, we have invested in private, but the leading specialty hospital chain, especially in cardiovascular treatment. So as people get richer lifestyle, unfortunately, with that, cardiovascular disease incidence become very high. So there's enormous gap between the demand of services and the supply. So this is really a major high quality private practice. You mentioned demographics. Conventional wisdom say, well, given China is aging very fast, so everything's negative. But in fact, smart money will quickly recognize there are opportunities. So even with the rapid aging, there are new investment opportunities, new value creation opportunities popping up.
Maybe we should go back to before you founded Primavera. You are the Greater China Chairman of Goldman Sachs, and in that capacity, I think you hosted the great and the good as they arrived, whether it was Hank or others. What are your memories of that time? What was it like?
Well, I have a very fond memory of my days at Goldman Sachs.
Just as well that you say that. That's good. Keep going in that case.
And I guess first is really the work I was able to participate. That's really intellectually, emotionally, stimulating and rewarding, right? And then the wonderful, talented colleagues I met, many of them in this room, Ron and others. So we still stay as close friends, after all these years since my retirement, right? So, I had, amazing career at Goldman, and every time looking back, sweet memory.
Now, what was it like hosting Hank when he was coming out in the early days, former Treasury Secretary and sort of an important guy around town, and you're here, he's coming through, we're building a business. What were the things you were doing? Yeah, I had a really incredible opportunity to work very closely with Hank during my time at the firm. I learned a lot from him, right? And it's really, really very strong partnership and also mentor-mentee relationship. And together we, were involved in some of the very impactful, as though I don't know if still franchise defining transactions. It's a lot of fun.
Hank, for many of you know him, he's a very distinctive leader, right? So he's a dynamo, right? And personality-wise, quite impatient, right? Maybe
laughing, I think, quite
having trouble sitting still,
yeah.
right? Always action-oriented, right? So, so I'm kind of different, and I come from sort of academic policy background, so I'm a bit more. So trying to restrain him. I think in terms of how serving clients and really have an impact, right? So kind of back then, I think it to some degree still true. And I'm sure right, given your background, Kevin, is at that time the Chinese, whether it's leaders in the government, in the industry, yes, they're interested in our idea proposal in terms of how to do a transaction, but they were even more interested in the big policy, strategic ideas, right? So Hank and I talked a lot about this at Hank. So when you go to China, don't just sell, mercure, just get into deal and ask your pitch for a transaction, right? Let's really engage with the Chinese leaders, because they are facing like tremendous challenges back then, building a modern free market economy. They are very smart. They had this unquenchable thirst for knowledge, for information, for ideas. So if we position ourselves as a thought leader, right, we would, have differentiated the way to build the best-in-class client relationship that could be long-lasting, and everything will follow. Okay, so it's really amazing, given what you know about Hank's personality. I was, he was very patient, meeting, Chinese clients, talking about all those macroeconomic policies, U.S.-China relationship, and sometimes conservation. He's a very big, conservation, passionate about the conservation. So those are similarly far removed from day-to-day, commercial deal making, but actually have had a long-lasting impact.
Okay, we've had a chance to talk about China in the past, China in the future, your past, your future. There's a lot of ground we've covered, and I think it reflects the enormous range of interests and experience that you've assembled in your career, and I know the best is yet to come, so we look forward to continuing this conversation. But for today, thank you for being our guest in Goldman Sachs Talks. Thanks everyone for joining. A big hand for Fred Hu.
Thank you.